Hello everybody, I'm Josh Cork and this is your Blue Edge Energy Weekly Market Snapshot. I got some wild hair because it's been a wild week in the market. Here's some quick hits for this week. Natural gas prices have moved higher and at records due to forecasted cool temperatures ahead, and the war is heating up overseas. Number two, geopolitical risks are increasing as the Russian-Ukraine war is simply dragging on past the 1 month mark. So let's go ahead and jump right into some current market trends. The month we're sitting in right now fell off the books several weeks back at $4.56.8. And we moved to April, which is coming up to an end real quick, sits at $5.40.1 a decatherm as of yesterday. Here's a quick depiction of the price movement over the past 12 months. As you can see, we are at record highs right now. Now this bar graph we're going to show you provides some further data points about the prompt months movements as well in just basic increments that just definitely demonstrate the change over the last year. When we look at the regional cash out price, the Chicago Citygate price is at $4.74.5. Meanwhile, Northern Natural Gas Ventura is at $4.61.5, hanging well below the national NYMEX market. Now these prices once again are important because we take the average of the dailies in a given month. That becomes our sellback price, and if we need more gas in a given month, that's all dictated by those averages of the dailies. Now the following graph here is a price chart of the next 4 years of futures. Pay attention to the price trend over time. As we continue forward, we go lower and lower in price as it goes out. Meanwhile, our market here in 2020 is in contango at the moment. We have a steady incline going on from here to the end of the year. And also just notice the price jump week over week. It's been monumental. Now here's some information, the same thing, just more as a bar graph focusing on winter pricing. So let's talk about that. Next winter is at a whopper, $5.55.4 a decatherm. We go out a winter after that, it's $4.11. In 2024-2025 winter rests at $3.81.3 a decatherm. Now, we're going to shift our gears over to the storage report. The EIA storage report kind of came in as expected this week at a negative 51 BCF to ground change storage inventory. Let's put that in layman's terms. The current overall ground storage inventory is at 1,389 BCF, 366 behind last year, which again, COVID year, so it's a little bit off. But the 5-year average, we're 293 BCF behind the 5-year average. Now let's shift gears to the weather real quick. The Wisconsin short-term weather forecast is calling for below normal temperatures with daily highs near the 40s and overnight lows in the mid-20s. And for some of us on Thursday, as you're watching this on Friday, even saw some flurries where we are located. Meanwhile, the 8 to 14 day national forecast is calling for most of central USA to experience colder than normal temperatures, but warmer than normal temperatures for the Pacific coast and for our friends down in the Sunshine State of Florida. Let's cover a few parting notes, shall we? The April natural gas contract has surged this week as colder weather forecasts and continued fighting in Ukraine has increased worries in the market overall, and the tension is ratcheted up. The April contract traded as low as $4.74 earlier this week, and as we sit now, over $5.41 a decatherm. From a fundamental point of view, today's storage report of negative 51 BCF was bearish. The expectation for the next 2 weeks is that we will see an early injection next week, followed by a withdrawal the week after that, thanks to this cold weather burst. And that will have us exiting winters to our current level of 1,369 BCF, give or take. This is going to be below the 5-year average, but we're well above our historic low inventory levels, which we saw back in 2014. We're also seeing continued growth in active U.S. drilling rigs, well off their pandemic lows. Check out this chart here. You can see that over the past 2 years, since the early stages of COVID, we've seen a continued increase in drilling rig counts. Now, on another comment, the concerns dominating many of our markets continue to be the war in Ukraine. The apparent success of the Ukrainian forces is actually bad news for the markets. If the Ukrainian forces are seen to be winning, then it will become impossible for President Zelensky to agree to many terms, if any, of Putin's demands. On the other hand, Putin, the dictator, cannot lose and must deliver some victory to the Russian people to stay in power or lose power, face war crimes, and perhaps meet the fate of Saddam Hussein. In other words, things right now look to be between a rock and a hard place, and many analysts are concerned that this war is going to escalate and possibly spread. Let's pray and hope that doesn't happen. For on behalf of all of us here, Blake, Karen, TJ, and myself, have a wonderful weekend. If you have any questions, please feel free to reach out to us. You know how to get a hold of us. Take care.